We are live. Yes, we are. We are live. Okay, what a mixed day, right? Welcome back, investors, to Ticker Time News. I am Adam, and this is the place where smart investors come to learn. Now, the rebound effect that began late in the day on Friday, well, it hit a wall today as market participants really grappled with concerns about economic and earnings growth prospects because they are slowing. Many stocks got battered and bruised, hitting the wall, while others kind of fared pretty well without too many scratches. The biggest pains came early in the session when the Nasdaq was down as much as 3.8%, the S&P 500 down as much as 2.6%, and the Dow Jones down as much as 1.6% at their lowest levels of the day. Now, there was some healing, however, that occurred as the day progressed. The Dow Jones rallied into positive territory and closed near its high for the session. But the Nasdaq and the S&P 500 ended the session lower, with the Nasdaq down 2.3% and the S&P 500 down 0.8%. Now, unlike the early selling in the morning, there wasn't any specific news or catalyst for the turnaround effort today. Ironically, the early losses themselves likely served as the spark for the turnaround as market participants came back to the idea that the stock market is oversold and is due for a meaningful recovery. And this is exactly what I shared with our investor community on Patreon this morning before the market opened. And I can hop right over. This is the back end of Patreon. This is exactly what I published this morning. And the highlighted area towards the bottom of the screen, it says, quote, "Watch for oversold conditions for another bounce. That could be any time, later today, later this week, or next week. Watch for weakness or strength in the mega cap tech stocks. Because that, ladies and gentlemen, is where the rebound will start." Now, let's take a look at this. We're going to hop over to the chart again. We're going to look at the Vanguard Mega Cap Growth ETF. I almost said stock. And you can do this at home. There is a link in the description for a free account to TradingView. That's where all the charting is done. The ticker symbol for the Vanguard Mega Cap Growth ETF is MGK. MGK. Now, I want to look at this. I'm going to take and go to the 5-minute chart so we can see just today. And if we look, you can see today on the screen right here. We opened the morning with a big gap down, right? We closed up pretty nicely yesterday, near highs, but not quite at yesterday's highs. Big gap down this morning, sold off in the morning. But right here on the 5-minute chart for the mega cap growth or mega cap tech, because this is where most of that mega cap tech is, you'll see the turnaround started at 10:15 a.m. 10:15 a.m. Now remember that, and you can see this purple line that I drew here on the 5-minute chart that's ascending. We start at 10:15 a.m. and we make higher lows for the rest of the day, higher lows. We also make higher highs throughout the day too. Only 3 of them, but still higher highs and higher lows. That's in an uptrend. Just for today, just a small sample, but this is where the turnaround would occur. 10:15, remember that. Now let's go over to the S&P 500. The ticker symbol I use is SPX. Okay, still on the 5-minute chart for today. The turnaround for the S&P 500 occurred at 10:50 a.m. Just 35 minutes later, after the turnaround began in the big cap, the mega cap growth, or your mega cap tech, 35 minutes later, the S&P 500 turned around and started rallying into the close. The S&P 500 made higher lows throughout the day. It also made higher highs throughout the day as well. And you can see that here. This is the low where the S&P 500 turned around at right about 10:50 a.m. We have a higher low. I mean, you could also call this dip right here a higher low. We have this right here as a higher low. That is a trend. It's a short-term trend because this is 5 minutes on for today. It's the 5-minute chart, so it's a short-term trend. And then you have your higher highs right here, and right here. Okay. So 35 minutes after Maga-Cap turned it around, then the S&P turned it around as well, and it rallied throughout the rest of the day. Now, tomorrow's a flip of the coin. We could end up gapping down again. Most likely, we may go up a little bit in tomorrow morning, and tomorrow could be a green day, just because the market is considerably oversold, and that's really what is guiding these bounces that we seem to get. The bounce that we got late in on Friday, the bounce we got yesterday, the bounce that we got today, right? These are all conditions on the chart that are setting up saying, well, wait a minute, this market is completely oversold. And when I go to the daily view for the S&P 500, it is showing the same thing. The market is just tremendously oversold, but the market is wrestling with oversold and the maybe it's the I don't want to wake up yet and face reality that the economy is slowing down. I don't want to go I'm not going to touch that. I don't want to go there. I don't want to think about that. I just need this market to rally because the market's oversold. Let's just paint over, erase, let's just ignore this noise, right? Let's just call it FUD and say that, you know, it's nothing, but the economy is slowing down. They're wrestling with this, right? And that's why we get these rallies and these sell-offs, and we've got a lot of volatility right now. Now, I just want to point this out. If you would like to have this valuable content to help you along your investor journey, then come join us by clicking the first link in the description or the link in the, I think it's called a pinned comment in the live chat. We'd love to see you there. Tons of information. Now, the notion of a sustained rally in the market got put to a series of tests this morning, following a spat of developments that played into existing concerns about a slowdown in growth right here at home in the United States and abroad that could lead to an eventual cut in earnings growth estimates. If earnings get cut, then the market's coming down. It's as simple as that. If analysts start to cut their price targets, cut their growth or EPS or revenue targets for companies to hit because the economy is slowing down, the whole market's coming down. And that's why I'm on the team that I do not believe we have seen market bottom yet. We may find some local bottoms and rally like we did after we hit a bottom today, like we did when we hit a bottom on Friday. And we'll have those local rallies. But the overall trend is down, and we have not seen the bottom yet. I don't believe so. Okay, here's a few reasons for why I don't think we've hit bottom yet, and a few reasons for why the economy is shrinking. It's slowing. Snap. Ticker symbol is the company name in SNAP. Snap. Let's see here. Dave, I liked your idea yesterday that some stock retracements could go to 2019 levels. Yeah, that was a very interesting theory. And unfortunately, some of that's lining up. Like Facebook is a scary oh my goodness, it's a scary stock chart that kind of matches up to this 2019 theory. And if that's the case, then my goodness, the market has a lot of pain to go. But here's a few reasons for why I believe there's more pain. Now, most of these reasons, I believe investors on Patreon already got throughout today. But here they are listed out. First, Snap. Snap was down 43%. Why was Snap down 43%? Because they said Monday after the close during their earnings call that it expects its Q2 revenue and its adjusted EBITDA to be below prior guidance because, and this is the kicker right here, because the macroeconomic environment has deteriorated further and faster than anticipated. Let me say that one more time, because this is a huge statement. Companies don't like to come out and say things like this, right? Because it hurts them, obviously. I mean, look, 43% drop. Macroeconomic environment has deteriorated further and faster than anticipated. That means the market is collapsing. The growth is slowing. We are contracting right now. We are likely in a recession at this moment in time. Remember, the first quarter GDP contracted. All we need is one more quarter and we are technically in a recession. Number two, Best Buy, ticker symbol BBY. Best Buy. Did they finish up today or they were down? They finished up. 1.2% up, a third of a percent up in the after hours. But they did have this big drop off right here before earnings. So don't let this surprise you that they were up when I'm about to reveal that they missed their earnings, right? You can see right here. I'm going to click on this. Bam. Now, not by much. I'll give you that. Not by much. But it's something else that they said on their earnings call in combination with missing EPS. Now, they did beat on revenue. You can see that by 235. That has to be 1,000. 2.26%. But during the earnings call, Best Buy acknowledged that it saw a worsening in macro conditions as it lowered its fiscal year 23 comparable sales guidance to -3% to -6% from -1% to -4%. So we have Snap and Best Buy kind of saying the same thing. Macroeconomic environment is deteriorating faster and further than they anticipated. That is a big red flag. Two of them right there. Here's another one. Small cap specialty retailer Abercrombie & Fitch. Ticker symbol is ANF. They were down big today too, off of their earnings. 28.5% big drop. And I actually believe mortgage rates might have come down today too, just a little bit. But I'll talk about that in just a moment when we get to housing. Look at this. They missed their EPS by 29 cents a share, or 1,237%. That's horrible. Horrible. They did beat on revenue by 1.6 million or $13 million. I'm sorry, 1.6% or 13.4 million. I'm sorry, I'm excited and worked up right now about all of this that I'm sharing with you right now. So do forgive me for that little mistake. But they dropped 28.5% today. And they reported disappointing fiscal Q1 results. And the big one, disappointing guidance, citing higher cost and lower sales due to, and this is an assumption on their part, but this is what they believe. This is what they believe drove sales lower. An assumption that inflationary impact on the consumer caused their sales to drop. So, inflationary impact on consumers. We know it, right? We don't need a company to tell us that inflation is too high and that inflation is impacting the consumer. Beginning of the year, consumer was strong. Right now, the consumer is being weakened. By the end of this year, the consumer will be weak. And that doesn't match up, and that doesn't line up for a strong economy as we move through the year. That lines up with what I've been saying since the beginning of the year. The first half of the year will be okay. The second half of the year will be worse. Now, how much worse is the big question. How long will the recession last? 2 quarters? Or will this be even worse than that? Will we get a third quarter of contraction or a fourth quarter of contraction? That's we need the crystal ball for. We don't know. Now, the fourth is the preliminary May manufacturing and services PMI reading out of Japan, out of the Eurozone, which is Europe, and the US. All 3 parts of the world showed that a deceleration in activity versus April occurred. A slowdown. Here's number 5. The April new home sales report was much weaker than expected and included a downwardly revised for March. And we're going to talk about that in more detail. That's another one. And it missed big time. And number 6, if you're counting, big list. UBS and JP Morgan Chase both cut the 2022 GDP growth estimates for China, and reports suggested that Beijing has stepped up its quarantine efforts to stop the spread of COVID in Beijing. And there was a video, it was unconfirmed, so I don't know if it was real or not, but it showed citizens walking out of the city of Shanghai. So what's really happening in China right now? That's going to be a big deal with supply chains and products moving forward. Now, the merging of all these developments that I just shared undercut most sectors, particularly the communication sector. It was down 3.7% today. Consumer discretionary down 2.6% today, and information technology down 1.6%. And to be fair, those sectors did finish higher than their lows for the day because there was a bit of a bounce in today's session, as did most other sectors. But nevertheless, the slowdown concerns were evident in the performance of the counter-cyclical utilities, up 2%, consumer staples up 1.6%, and healthcare up 0.3%. Real estate up 1.2%, also outperformed, past tense, bolstered by the drop in market rates, which was an offshoot of concerns about the economic environment and the ongoing struggles for the stock market. The 10-year yield, let's look at that, US 10Y. It settled the day down 10 basis points to 2.76. It's down a little bit further here in the after hours, not by much. And then the 2-year, but first, one thing to notice here. On the 10-year, we are making lower highs. Can this get back up? The only way right now that this can get back up, because the 10-year, remember, is more sensitive to growth and inflation. If growth is slowing down, then people are going to leave stocks, fly over to the 10, maybe the 30. Who knows what they're going to do? But they go over to bonds for safety. It's called flight to safety. The more people that go over to the 10-year, the lower the yield becomes. So it's kind of backwards or counterintuitive. The more people that go into bonds, the lower the rate becomes, the more expensive the bond becomes. So it's a little bit different than the percentage when you see and you look at stocks, right? So a little bit different there. But 2.76 is where it finished today. Now the 2-year US 02Y gets you the 2-year. The 2-year settled down 11 basis points today to 2.50%. It's now at 2.48%, so it's down quite a bit more. But interesting fact here on the 2-year is it's getting down to support. Support is right about 2.482-ish, 2.40. I can put a line right there at 2.4. 2.475 is where I'll put that line. And you can see here today, it's settled right on it. Back on April the 27th, it bounced off of it. And April the 26th, it found support on it. And April the 19th, it ran up through it. It did act as resistance and support going back a little bit further than this box that I have here. But this is the box the 2 years in. It's moving sideways right now. If the 10-year continues its decline and the 2-year remains flat, then guess what's going to happen? The 10-year is going to sink underneath the 2-year, and we're going to get an inverted yield curve again for the second time this year. Now, usually when we get one, that means recession is in the future. 12, 16 months, 18 months away. But we're already contracting now. First quarter officially contracted. And we're seeing, I just gave you 6 signs showing that we're contracting right now, this very moment in time. This is not a good thing for stocks. Now, I'm not saying that there won't be bounces, because there will. There absolutely will. But the overall trend is down right now. Okay, so there was an obvious flight to safety with the treasuries today out of stocks. Now, something I don't usually touch on, the US dollar index, it slipped 0.3% today. It was down. So the dollar was weakening. And the dollar actually hit a 1-month low today, which helped gold. When the dollar is strong and the dollar is strengthening like it has been for the past several weeks, for the past several weeks, it's been strengthening. That's when gold will typically go down. Dollar goes up in strength and gold goes down. Well, when the dollar goes down, that means gold goes up. GOLD, just type in gold. That takes you directly to it on the chart. And you can see, when we talked about this the other day, I said I wanted gold to get back into this trading channel. And that's exactly what it did today. But it found resistance at this line here, which is right about 1870 an ounce. 1,870 an ounce. There's a bit of resistance there. It occurred back here. It was support before finally breaking through it. Back here, it was resistance before finally breaking above it. And remember, old resistance can become new support, and old support can become new resistance. It happens all the time on the charts. So don't let that be a point of confusion. Just want to make sure that's clear. So gold is right back above where I wanted it to be. With gold being back up, it is now safely, and it has closed the day above its 200-day moving average, which is a good sign. Now, here's another one that we always track when we're looking for local bottoms or potential bounces, little swings. Not the overall direction, but the VIX, right? volatility index, VIX, and then you want the second one down. You want the CBOE volatility index. It popped today 3.4%. It was up much higher earlier in the day, right? This morning, it was much higher. It got up to a 31 today, and it's now at a 29.4. So it was green, but my goodness, it looks like it's moving sideways, but it's got these big wicks off of it, right? And those wicks are the volatility. And whenever this gets above 30, above 33, that's the real point. That's when you know we're going to have a nice mini correction going back in the upwards direction for stocks, right? So when the VIX gets above 33 over the past 2 years, that has been a sign that we're going to get a nice day or two, maybe 3 or 4 day bounce in the market. So we're not near that right now, but we did approach 30. We broke 30. We got to 31. And usually once it gets to 30, you can see a bounce in the market. That's what happened today. Yesterday, it got as high as a 30 also before retreating and sinking lower by 3.2%. So watch those. And even when we go back to Friday, right? Friday, it got as high as 32 before the reversal occurred. So the VIX is a big teller along with Maga-Cap growth for whenever there's going to be a bounce in the market or a turnaround in market direction, especially for the indices, especially for the S&P 500, the NASDAQ, the Dow Jones, and the Russell 2000. They move a little bit differently, but still, they'll move. Okay, let's keep moving on with this. I think I've almost covered all of my notes here. We also have the Fed funds futures market. It has now priced a noticeably lower probability of a 50 basis point rate hike in the September and November FOMC meetings. And if you remember, what the Fed said was we would get a 50 basis point rate hike in June, we would get a 50 in July, and then we may get a 50 in September, but they weren't quite sure. We know for sure that June and July, they have already said would be a 50 basis point rate hike. Those two together mean the rate is going up a full percentage point over those 2 months. So there's that. So since the market is kind of betting that September won't be a 50 basis point rate hike due to all of the signs of a slowing economy or a contracting economy, then that could be a interesting sign for the market that when the Fed becomes more dovish, the market typically rallies. When the Fed becomes more hawkish, then the stock market typically will start to fall, right? So all those things I just laid out point to slowing growth. Now, on the economic data front today, we got to talk about housing for a moment. New home sales decreased 16.6% month over month in April. That is a big decrease. The housing market, standing on maybe a 3 pillars, one pillar is about to crumble. The housing market is not in a safe place right now. Now, this 16.6% month over month decline in April for new homes gets seasonally adjusted to an annual rate of 591,000 units. The expectation was 750,000 units. That is a big miss. Now, on a year-over-year basis, new home sales, sit down for this, we're down 26.9%. That is huge. Now, the key takeaway from this, and the only takeaway from this, is that new home sales are counted when a contract is signed. That's a fact. And the sharp drop in March and the large miss versus expectations in April underscore the affordability pressures that are quickly emergent with the spike in mortgage rates. Mortgage rates have gone up significantly over the past couple of months because of the Fed funds rate going up. Banks got to get their rates up before Fed fund rate goes up, and bank rates go up higher and quicker and then take a longer time to come back down. Many of you know, my family and I, we've been looking for a place to move, a new home to buy, and we got priced out of the market. From the beginning of this year to, what was it, the end of March, middle of April, sometime in that time frame, is when we were priced out of the market because a mortgage payment on a $400,000 loan went up by $700 a month. That is just crazy. The average American citizen cannot keep up with that, rate of inflation. Then the preliminary IHS market manufacturing PMI for May decreased to 57.5 from a 59.2 in the final reading for April. And the preliminary IHS market services PMI for May decreased to 53.5 from 55.6 on the final reading for April. Now, anything above 50 means that you're still at a rate of growth, right? If you're 50 and under, you are contracting. So what we are seeing here, from a 55 to a 53, growth is slowing and getting awfully close to that point of contraction. Now again, this is a sign of slowing growth of the economy. Looking ahead, investors will receive the weekly MBA Mortgage Application Index, April Durable Goods Orders report, and also the FOMC minutes for the May meeting. Now, that always stirs up the market when we get to actually read the minutes from the meeting. So I'm sure some cool stuff will come out tomorrow about the FOMC meeting that they had in May. All right, we also get earnings tomorrow from NVIDIA, ticker symbol NVDA. I think there's going to be some interesting things within the report. I think maybe some of the negativity in the report has kind of been priced in a little bit, but this would not surprise me one bit if NVIDIA gets hit tomorrow because of earnings. Watch out for their data center growth. That should actually be something that's growing for them. Are they able to get all of their components that they need? That would be another big question. I am so on the fence with NVIDIA that I can't even begin to say whether NVIDIA is going to go up or down tomorrow from earnings. But what I can say is that our buy box is still right here for NVIDIA. It starts at 150 and below. If NVIDIA does get a mixed earnings report, anything negative in it whatsoever, anything negative in the earnings call, and we may actually get NVIDIA in our buy box tomorrow. And that's 150 and below. I'd really like to get down to 130. That would be, for me, a really decent price for NVIDIA. We also get Snowflake earnings. Ticker symbol is SNOW tomorrow. Software company. A lot of times, hardware companies are definitely getting beaten up here, and that's why I'm so on the fence about NVIDIA, and I think it could just be, I can't say. I don't know. I honestly, all I can say is I do not know. Earnings have been so from one extreme to the other this earnings season that I honestly, I don't know. And I hope you picked that up. I'm not afraid to say I don't know when I really don't know something. So I hope you're picking that up. Snowflake, I think that's just going to be difficult. Although software, it can do a little bit of a better job. Just look at Palo Alto Network. Although that's cybersecurity, Snowflake is more data oriented. So we got that. Dick's Sporting Goods, I'm sure, you know, that's a retail that could be hurting, although it's sports. People are getting out more, summertime. So potentially maybe a bright spot, but I'm sure there's going to be negative stuff in there too. We get Williams-Sonoma, ticker symbol WSM, and Dick's Sporting Goods, ticker symbol is DKS. And then we also get Box reporting tomorrow. Ticker symbol is the company name, Box. All right, so let's jump into your questions. That's everything that I wanted to cover in the quick take of this video. Got that done in 36 minutes. Oh man, I really think I got to change the name of quick take to something else for this. So just real quick before I dive into your questions, if you did learn something today, it would be really helpful, and do me a favor, click that like button. That helps out a lot. Share this video wherever you can. That helps too. And if it's your first time watching, click subscribe. That would be awesome. And if you really like this information and you want more of it, then click the first link in the description. Come join investors just like you and me over on Patreon. Lots of information getting released over there. Hope it's provides value to everyone who's using the service over there. And oh yeah, investors on Patreon. I sent out today a technical analysis, was the headline for it, and it had some ticker symbols in there for different type of setups. Like for example, companies that are in a long-term upward trend that have recently pulled back, companies that are under $25 a share that have high volume and some positive movement and some momentum behind them. I called them zippers. So I need your feedback on that. Is that something you liked? Would you like it to be tweaked in some way or another? Was it too many tickers? Do you want it, broken down into more categories? Because I can definitely break it down into more categories. Give me some feedback on that one. Again, it was titled Technical Analysis. I really want your feedback on that one. I think that could be a really positive, especially for day traders and swing traders, to give you some extra knowledge and information on what's happening in the market and where you could be going for different things. So look at that one for me and let me know. Okay, woo, let's jump into this. Not missing today's stream. The minutes and envy, my goodness, not missing today's stream. Absolutely. Thank you for that. I greatly appreciate it. The minutes and oh my gosh. Okay, Adam, take a breath, slow down. You just ran through this. That was a ton of information. All right. Okay, the minutes and NVDA earnings. I hope they miss or guide down. I want to buy in cheaper. Hello, all. Do you think it's essential to see a capitalization event? and crazy high VIX before a recovery can begin, or might the recovery start in a more subtle way? Haven't read it yet, but it sounds like it will be very helpful. We'll have to upgrade my level. All right. Okay. Very good. Okay, so let's start with NVIDIA here. I'm going to pull up my notes that I had written down here. Your question, Devin, about do you think we would get a big drop in the market and that would be our signal? Or do you think it's going to be slower? I think we could have a big drop off, because when we look back in history, and I'll pull the S&P 500 up in just a moment to give a bit of a breakdown on that. All right. All right, let's just right quick. I'm going to go while this is loading over here. I'm going to go back to the SPX, which is the S&P 500, and want to look at something right quick. March of 2020 was an anomaly in the grand scheme of things. I'm going to look at the weekly view, and I'm going to take volume away, and I'm going to take all the lines away so we can solely focus on the candles. Taking a moment to load here. If we look at what we're doing right now, you can see on the top right of the chart, we've been falling for 7 weeks in a row now, except for the Dow. The Dow has been falling for 8 weeks in a row now, but it's a pretty substantial pullback. I mean, it's 17.3% down from the high hit on January 3rd at the close. Now, if we look at March 2020, this is a big V-shape recovery. Fast pull down, real fast drop, and then a slow but relatively quick bounce back up. I mean, it took a couple months, right? And then if we look at this late 2018, September of 2018, and it fell. It took till December to reach the bottom, and then it took from December back to April, December to April, to recover all the losses, right? So this was a several month deal. And if we look at 2020, I mean, really it started towards the middle of February 2020. We hit the bottom by the end of March, 1st of April of 2020. And then to get back to the top, it was June of 2020, right? So February to June, February, March, April, May, June, 4 months to get from the top, bottom, and back up again to an equal point. Here we've got September. We've got about, what is this, 7 months to recover. Top, bottom, and back to a top. 7 months. If we go back further in time, let's look at this fall in 2008. This is more like what's happening right now. This is what I think. If we compare the top right here, we've got a double top, right? And then we're making these lower highs, and there's 3 of them before the big fall. Double top and then 3. look at what we got right here. We could call this right here, from here to here, a double top. And then there were 3 very precise points before we hit that drop off. You may be able to call this 1 point right here, but it's not really a peak. This is definitely a peak. So maybe we're at the second peak. We still haven't hit the third peak. And if we go back to 2008, and again, this setup looks awfully similar. We had the first, after the double top, we had the first peak, and we had a big fall, right? Let me measure this fall. Just from that first peak, the fall was 16%, okay? And then we had a nice rebound. That rebound lasted from the, let's see here, middle of March, middle of April. So 2 months to recover. And then we had that other big fall, recovery, and then the giant fall. So if we're comparing what's happening right here to what's happening with us right now, we're at the first peak and the second fall. The first peak, the second fall means there's going to be one more little peak before the big fall. If this matches up, it may not, right? We may be in the middle of that big fall right now, but that final fall, if you look at it, there were 3 weeks, 2 of them big. There was a 9.3% drop, and then the final big drop was 18.2%. And this is the S&P 500 falling 18.2% in 1 week. Capitulation? That's capitulation. When everyone just throws in the towel and hands up. That's when I would be using the SPXS ETN to make sure I'm getting something during the fall. But then look at that. Once the capitulation occurred, the market was very hesitant and even went down further. So if we're looking for that here, where we are right now, where's the capitulation? The biggest fall, 2.7, 3.2. 3.2 was the biggest weekly fall. We have not seen a capitulation move yet. Where's the 15%, 20%, 18% drop in a week? That's when we are at capitulation. And that doesn't necessarily mean that we have hit bottom. If we're using 2008 as a potential, very loose potential. Oh, I skipped right past it. Very loose potential for where we potentially, why do I keep missing it? There we go. Very loose to where we're at right now. Okay. Here we go. I'm just getting all lost on the charts. Keep going back and forth. Here's 2008 again. So this big capitulation move, 9.3%, 18.2% drop. That's when you see investors throwing in the towel. I give up on this. I'm out. Take my money. I'll see you later. Type of attitude. So I think we're looking for this, and it hasn't occurred yet. If we go back a little bit further in time, look right here before the capitulation happened. 1, 2, 3, 4, 5, 6, 7 weeks right there. And out of 7 weeks, 6 were red. The final 5 weeks were all red. That's very close to where we are right now, meaning we may get a week or two bounce. we may get a week or two where it's actually green candles before the market finally tips over and capitulates. That's what I'm looking for right here. This little rally, and then the capitulation, we give up. And then it can sink even further than that. Do I travel to, do you, okay, hold on, I keep clicking on it. Do you trade SPX over SPY? Yes, I trade SPX over SPY, yes. Although I had a question proposed about that in a comment of one video recently. So I have started to look at the SPY, look at QQQ, and become more familiar with them, as it would be. Okay, NVIDIA. Okay, there we go. Hopefully that doesn't, hopefully that makes sense for what I'm thinking with what the market is doing right now. Okay, NVDA. So if you want on the charts, go back and look at different years when we had bear markets and how they acted on a weekly basis like that, and it may be interesting. Okay, so NVIDIA here on the weekly. Let's go back to the daily view. It's getting close to the buy box with earnings coming up. Oh, I need this back. Drawing tool. All right, EPS of $1.30, earnings of $8.12 billion. And if I look at my notes here, so they're reporting after the market closes. Revenue growth of 42%. Analysts say that revenue could, data center revenue could actually beat gaming revenue for the first time ever. Yeah, data center. Yeah, data center for me is the big thing. That's what I had written down, which that's what I already said earlier. Data centers will be a key indicator for how well NVIDIA is doing. Enterprise customers investing in AI, that will also be a big one. And I am so torn right here on how NVIDIA is going to do on earnings. It's been a long time since I have felt so conflicted on expectations, right? Like, I'm trying to weigh my expectations with reality, and hardware has just been getting beat up lately. Cisco, I mean, it's really gotten hurt. Yeah, I just don't think it's going to be that good of an earnings report for NVIDIA. If we look at last quarter, I mean, they had a nice 9-cent or 7% beat on EPS. Revenue was up over $222 million, or 3%. I just think that guidance is going to be a tough one for them to be able to be, too positive about. A data center growth, sure. I think so. But I'm just so torn on whether it's positive or negative. Let's see. I hope they miss and guide down. I want to buy cheaper. Yeah, I do too. That's why I've got that buy box there. I would really like 130. 130 did back here, December of 2020 through September of 2020, backing up that far. There was nice support there. But remember that 2019 theory that I talked about yesterday? That, oh my goodness, I hope we don't really actually do that. But that would take it back to $75 a share. That would be rough for a lot of people if that happened. Okay, let's see here. SPY is so liquid. Thank you, very helpful and very scary. Yeah, it is. Unfortunately, it is. And I just don't think the outlook is going to have a lot of positive moments in it. There was another theory that I read about that talked about, and I think I shared it on a live stream before, but in 08 we had, well, going back in 2000 we had the internet bubble, right? It really didn't get fixed. The can got kicked down the road. And then we went from an equity problem in the stock market to a housing problem in the 2008 housing crisis. But the financial system didn't really get fixed, and they kicked the can down the road. And now we're in a position where the bond market might actually have a crisis. And if that's the case, where can we kick the can further down the road outside of bonds? Nowhere. There's no other place. You've reached the end of the road. You can't kick the can down the road any further. And if this theory came true, I mean, it was a big mess up of the financial system, almost like a reset of the financial system. That was a scary theory to read about, but it had a few cool points that made sense. But anyways, enough rambling about that. Let's see, anything else? I am definitely leaning into SPY QQQ a little bit more, getting more familiar with it, because I know a lot of people, especially retail traders, are really into where the SPY and QQQ, how they move. And I think actually in one of the notes that I sent out today to investors on Patreon, I think I mentioned something about the SPY in there. I was doing some technical analysis about it, and for a reversal. Yeah, that's right. I did. I mentioned that. Okay. All right. Any other questions to get into today, or are we just kind of wrap up for today, and hopefully tomorrow will be a little bit better? SPY options has made me over 50%. 50% of my money. Okay. All right. That's cool. Well, then I will definitely become more familiar with SPY. I know it tracks with the with SPX. I mean, they're practically the same on there. Sure. AMD Technical Analysis. You got it. I actually picked up some AMD the other day. when we had our not a big bottom, but when we had our bottom on Friday, it fell into my buy box again. So I definitely got a few more shares. I don't think we've seen lows yet for the year on this. I mean, I think it can go down quite a bit further. And if we use that one, man, if that one, I don't even want to say it. The 2019 theory, this thing is $50 if that's the case. Actually, matter of fact, I just want to do this right quick. I'm going from this high hit here, November of 21, and I'm going, if it fell to $50, that would be a 69% fall. That's not unrealistic. That is not unrealistic at all. Man, that 2019 theory, it has really got me thinking outside the box completely, because it's definitely not something mainstream that many others are thinking about. But 2019, I mean, you got to go back to $50 as a high, and that would be a 69% pullback from its high from November. So, man, if that would be the case. Okay, so right now, for those of you who don't know, yesterday I talked about a theory that I read about and started connecting some dots to, that talked about all the liquidity that was printed and put into the market from COVID all through 2020 into 2021, is being sucked out of the market right now with quantitative tightening, rising interest rates, the Fed not spending as much. So that liquidity coming out of the market could reset the market back to where we left pre-pandemic. So the end of 2019, you could possibly say the beginning of 2020, January, February, but you can't go past February. And if you look at Facebook is coming right down to those 2019 levels. And the way Tesla was falling today, I thought, well, maybe my 550 buy box for Tesla, maybe it might go back to 2019. I hope not. It was just oh man, it kind of freaks you out a little bit, because I know the bottom's not in yet. We've got more room to fall. My buy box for AMD is anything, it starts at $98 and it drops down all the way to $75 a share. That's my buy box. So anything really underneath $86 a share, looking at where it was back here right above my head in this area right here, there was resistance that turned into support, that turned into resistance again, back and forth on this line. And that line is $84 a share. Many reactions means that's a very important line. So 84, 85, 86, I think those are good price points looking at this technically. Now, if we look here most recently, which is before and after its earnings, it was down to that $85, $84 level. Right here on the chart, it got down to $84.02, so almost breaking down to 83. So it found support here twice now locally, before and then after earnings, in that $84, $85 region. So I think as the market continues to pull back over this next quarter for AMD, it is in a defined downtrend right now. If I start from that November high and plop this trend line on, well, it doesn't match up perfectly. I have to break a couple rules here because one, this point right here, and I'll circle it to make it easier to see. The wick really breaks above this point right here, so it doesn't quite match up. And then again, we have a candle closing above that right here. But those are the only two spots. And then there are several other spots where it lines up on this line. And if this is the case, by the time that AMD gets around to next quarter's earnings, I mean, the company could literally be at $80 a share if it continues along this resistance line right here. So one of the most important things that you can do as an investor, even a trader right now, is have patience. Yes, we're going to have little rallies here or there. That's how the market works. Overall, we're in a downtrend, right? And if you want to look at this at an even better view, go to the weekly view, look at that trend line again, and it lines up really well outside of the wick here of this candle, going a little bit above it, but that wick did stop at the 21-day moving average. That's important. And then when you look at the wick up top here, hold on, I got to go back to this. Okay, there we go. The wick is slightly above here, but it's lining up there as a resistance point for AMD. Now, again, if I extend this line out a little bit to its next earnings report, then that's sitting right at $80 a share in 63 days. As long as this overall trend, which has been happening all year, continues until next earnings. So patience is very important. You are very welcome. Awesome that appreciate your question. Love your question. I appreciate you for asking that question. Okay. So just technically there, that's what we're seeing for AMD on the chart. Again, that buy box, we may get down to that bottom of it if this trend line continues and holds. And that next quarter would be July, so over summertime. And what's the old saying? Oh, I can't forget it. It's on the tip of my tongue. Something about buying and going away in May or something like that, and you don't come back till the fall. Oh well. I'll remember it. I'll look it up and share it with you guys another day. All right. Any other stocks you want me to look at? I surely can. Or we can wrap it up, and I'll see you guys tomorrow after the market closes. Now, one thing to point out here, asking about tomorrow. Let me go back to the daily here. We have resistance that we have to be careful about, and I talked a lot about this in yesterday's live stream. We have resistance on this purple line coming down here for the S&P 500. We're not near it right now. That line tomorrow is right about 39.70. We're at 39.41 right now on the S&P 500, and we would have to come down to 39.70 or go up to 39.70 before we hit that resistance. And it's been a wall going back to April the 21st. So that's where we need to watch for resistance. And just real quick on the 5-minute chart here, you can see that purple line. Yesterday at the close, we were close to it, but not quite up there. And then today at the close, not as close, but again, moving up towards that line, and that's where our first test of resistance will come in. I'm good for today. Awesome. You are welcome. Saw your Rivian video. Picked some up today. So far, so good. I think you sold yours around 180. Are you back in? I'm not back in yet. Not on Rivian. Not back on Rivian yet. There were some positive things in their earnings. And let me just pull this up right quick so you can see here. They beat EPS. They didn't lose as much money, which is always a good thing. They came in shy 37 million on revenue, but that's to be expected. They're ramping up building production. One cool thing that I really liked about Rivian's earnings was the fact that they said that they would not need to go back to the capital markets, meaning selling more shares to raise money before the next production of their next vehicle. I found that to be very interesting and very encouraging for Rivian. Not a lot of history here. Can't really do much technical analysis here for Rivian. But their low for the year is $25.50, and they seem to bounce off of that. And that was right at their last earnings. They're kind of holding. Even though they're down 5% today, they were down 3% yesterday, 2.3% the day before. They're not moving a lot. I know 5% is a big move. I understand that, but when you're used to bigger moves like 9% and 10% and what's this one 17%, 5% looks like a much smaller move. Volatility has slowed down quite a bit for Rivian right now. So that is another thing that's interesting for me. I'm starting to see a lot of Rivian trucks in California too. Oh, that's cool. That's awesome. Thanks, great info. Is the gold level for Patreon to see your trade email for today? Let me look right quick. Let me go to published. And technical analysis right here. Yeah, so it was for all tiers except for the bottom bronze one. All tiers except for the bronze one got this technical analysis note. And I talk about the more of a trading mindset for the market, not necessarily just investing, but more focused on trading. And this is where I actually mentioned the SPY. At this pace, a rally in the SPY back above $430 is likely needed to change the signal. The signal right now is bearish. To get it more into a more positive or bullish signal, 430 was that kind of mark there on the SPY. Talk about the internals and breadth, and then here you can see kind of got it broken down. Long positions that have pulled back a little bit, which I defined as minor corrections in stronger uptrends. And then I list out the ticker symbols for each one of those. And then same thing here, but on the reverse of that, pullbacks in shorts, minor corrections in strong downtrends. So these are the companies that are trending down, that have had a recent pullback. So if you want to short these companies, there you go. You can got longs and shorts. I did wide range breakouts. These are defined as strong volume moves, lower below recent support, filtered for highest volume above average. And then same thing here, wide range breakouts. Strong volume moves lower below recent support, filtered for highest volume above average. And then this one last category that I threw in, stocks under $25 with a strong up momentum by volume. And those were the tickers that fit that scenario. So I tried to throw in a bunch of categories that might fit a bunch of different trading styles. And we'll see if this works. I'd love your feedback on it. I would definitely keep doing this if you guys liked it. So let me know about that if you found it useful and helpful. And again, it's more for trading, not as much for investing, because most of everything else is focused towards investing, even short-term investing and long-term investing. So that's that. All right. Anything else? Happy to join. Will you explain what should Russian shares expect to happen? Okay, let's pop over there. Your first one. Well, I can pull it up, and this is on Russia's stock market. I have to admit, I have not ever looked at this before, to be completely honest. So I don't have a lot of knowledge to share here. And obviously, you know, the big fall here starting in October of 21, I don't know what that's about. Could it be because of the conflict? I don't know. There's a big drop from February. So historically, I don't know. I got to be completely honest. I've not looked into anything on the Russian stock exchange before. So I am definitely not the most knowledgeable here. Just to be completely honest. I get that it's a bank. I get what it does. But this stock chart falling right here, I'm just not sure if I can confidently say what this would look like. You know, I can look into them for sure. I'm definitely not familiar with these at all, and I don't want you to think that I'm just blowing smoke here and talking about this. But you know, it's support. It had a support level at 175, but that just got blown right through. And I mean, it didn't hold up at all. And you know, usually a stock, when it blows past an area where there's strong support, especially a gap down like this, there's usually a process that the stock will come back and fill in the gap. But I just don't know. I don't follow the Russian stock market. I know I'm sounding like a complete idiot here, but just being truthful. What was the other one you were? Let's see. Well, this one had a big fall, but it's recovered. And it's recovered. It's got this support here at 105. You can see the, change that color. It's bounced off of that here, resistance here, support here, support right here. And it looks like it's coming up to a, excuse me, a resistance point at about 170. This is ticker symbol GAZP. And there's definitely going to be resistance, it looks like, here at about 171. It looked like it got to 267 as its high today. So it's right there on resistance. If it can't break over this 170, 171 area, and it starts to falter back down, that could be a good potential shorting opportunity. It does have earnings in 8 days. That's obviously going to play into how this reacts with this resistance line here. But you can see the resistance back here in May of 21, and then it turned into support, and that's really what gave it its run up from that level. And then back here, resistance in November of 19. They have frozen all U.S. holders' activities. Not sure if it will recover. The chart you are looking at might be rubles. You are correct. It is rubles. It says so right here beside it, RUB. So 265 rubles. So it's got resistance at 170, 171 rubles here. But earnings could completely make it so that it doesn't matter. If the earnings are good, I mean, it would shoot up right above it. But if earnings are bad, then it's definitely going down here. Let me write down these that you have here. I can look at them and see, and we can talk about them during tomorrow's live stream. Well, just might as well just go. Let's just do it. We're here now. Let's not put off tomorrow what we can do today. LUKOY. Oh my goodness. 42% drop today. Did it release its earnings today? No, that's back in March. Wait a second. Is it even listed on here today? No. This must not be the right one. Thanks for your honest reply on Russian market for U.S. holders, though. After you find out more, I would love to hear more. Okay. Yeah, I'll spend some time. I'll do some research on them. Obviously, I'm not an expert on the Russian stock market, but hey, I'm willing to look and learn. I'm just going to write down here the ones that you have mentioned here in that post on the screen right now. And CBROM. Okay, I got them written down. Awesome. Well, I appreciate each and every one of you for joining me today. I greatly appreciate it. 3 things, just 3 things right quick, and then we'll wrap it up. Number 1, if you found value in this video, if this video was helpful, then please do click that like button. That really helps out. Also, sharing this video wherever you can, that is also a great help and subscribing. Those three things, they're free. Just take a few seconds to do, but they do help out the channel greatly. So I'd appreciate that. And then if you really like this content and you want more content, even content in written form, pre-market information, all kinds of different things, then click the first link in the description or the link pinned in the live chat and join us over there. We have a lot of fun. So, all right. Thanks again. You are welcome. Good night, and good night to you, sir. And thank you. Good night, all. I appreciate it. And let me just say so, not just in my words, but in the chat as well. Awesome. All right. Well, I'll wrap it up here. I'll see you guys tomorrow after the market closed for another quick take on the market. And of course, the most important part, answering your questions. All right. Let me find the off button here. Find my cursor first. All right. Ladies and gentlemen, thank you. Have a good night. And I'll see you in the next video.